Apartments in Dubai pay back their value through rent faster than any other global city analyzed by UBS. But when you look at the data, you realize that many areas are just not good for renting out. While a villa on Palm Jumeirah sounds cool, it often brings just a 3% yield. Other areas in Dubai can generate double that, or even more. If you don't know me, I'm Jay Abrams. I lead a team of real estate experts who help hundreds of people every month make smart, data-driven investments. So in today's video, I'll walk you through the list of 5 Dubai neighborhoods that are the best for investing in rental property. Starting with an area that is located just across the road from Dubai Marina. It's further from the beach than Marina, generally has lower housing quality, and doesn't even have a fraction of the fancy dining places Marina has. But its rental yields is 1.2 times higher compared to Marina. And the rent-to-price ratio can be 2 times higher than Dubai market average. How's that so? Let me explain. Despite being a bit further away, the location of this area is strong. First, because of the close proximity to the key tourist spots, such as Marina itself, the GBR beach and Blue Waters. Second, a metro station is just a few minutes away, so getting to the central areas from here is easy. For example, it takes residents exactly 26 minutes to get to downtown. This area is GLT, and apartments here can be significantly more affordable compared to iconic neighborhoods nearby. An average ready studio is roughly $200,000, which is 25% cheaper than in Marina. All of that makes the area great for renting out to both budget tourists on Airbnb and residents who need affordable housing near the lively hangout spots. However, there is another completely different side of GLT, and it's easy to miss if you've only been there as a tourist. See, Dubai has over 30 free zones. Their main feature is that if a company is registered there, it may qualify for 0% corporate tax. And GLT happens to be a free zone for commodities trading companies. All these gold and diamond traders need somewhere to live, and that's why high-class apartments are also in demand in GLT. So the area is a mix of properties that appeal to completely different types of tenants. And landlords here get quite lucrative rental yields. As a proxy metric for this, we use a rent-to-price ratio, which is simply the average rental rate divided by the average price. It's not an actual rental yield because it doesn't account for operating expenses, but it's a solid indicator of whether the area is good for renting out. The rent-to-price ratio in GLT is highest for studios at 8.5% on average. For 1 beds, it's 7.5%, for 2 beds, 6.6%. and for 3 beds, 5.8%. And there are outlier buildings that outperform the area's average numbers. My partner Andrei has visited GLT to show you one of them.
This is what GLT looks like: lakes and high-rise towers. It feels like, and indeed is, a more affordable and calmer version of Dubai Marina. And this is the MBL Royal, a building in GLT completed just 6 months ago. And it's a showcase of how higher-class properties can perform in this neighborhood. The building style is quite distinctive, and to be honest, not to my taste. But with investments, that's irrelevant. The numbers speak for themselves. Investors who bought a 1-bedroom apartments here at the off-plan stage in 2021 spent $357,000 on average. Now that doesn't sound special, but back then this price point was 70% higher than the average 1-bed in GLT. The average rental rate for a 1-bed in this building is around $33,000 per year, which translates into a 9.2% rent-to-initial price ratio. Recently, more higher-end buildings were announced in GLT, some under major hotel brands. However, the most attractive investment opportunity hasn't been announced yet, and we expect it to go public soon. And we'll let you know as soon as we can, so stay tuned.
GLT is not the only area that is located next to a big brother, but offers a more lucrative investment opportunity. There is a similar case with this neighborhood, right next to GVC. And GVC has one big strength and one big issue. The strength is its location. It's not far from key city spots. 15 minutes to Dubai Marina and 20 minutes to downtown. This, in combination with affordable pricing, attracts tens of thousands of expats here. And this demand from the tenants creates a very good rent-to-price ratio for landlords, more than 10% in some properties. So the neighboring areas also experience the same benefits. However, there is also a risk. The risk that another area nearby doesn't have. GVC is becoming more and more populated every year. In GVC there are right now 38,000 residential units. By 2027 this number will increase by 26,000. So the total will be 64,000 units. At the same time, this area, which has quite a similar size, has just 10,000 units. And when 10,000 more will be delivered by 2027, the total will still be 3 times lower than in GVC. Andrei will tell you what area I'm talking about and what it's like.
It's not hard to notice that architectural style is quite different from many other areas in Dubai. The thing is that almost all the apartment buildings here are low or mid-rise. This makes the area much less crowded, which also means less traffic. Compared to the neighborhood in GVC, it means spending about 20 minutes less trying to get in or out during the peak hours. And not all people who live there travel to work by car. The neighborhood is not far from central areas, but it's also within walking distance of the Science Park. It has offices of major pharmaceutical companies like AstraZeneca and Pfizer. This area is Arjan, and all in all, this place is a good option for residents looking for affordable housing. And of course, there are buildings here that have brought great returns to investors. Like this one. This is Prescott Prime Gardens. It might seem like nothing special, but this project comes with higher quality materials and more modern amenities compared to most other buildings in Arjan. As a result, it has a great rent-to-price ratio. On average, a studio apartment offers a 7.9% rent-to-price ratio, while 1 and 2 bedroom units can go as high as 8.4%.
Probably one thing that Arjan currently lacks is a metro station. Right now there are no official dates for opening one, only rumors. But there is another affordable residential neighborhood where a metro station nearby is confirmed. And even without it, the location of the area is not bad for working expats. Let's look at the map. The place is deep into the desert, but it's just 20 minutes from downtown because of the direct highway. And just 5 minutes away there is Dubai Silicon Oasis, where many offices are located. And here is Academic City. Its proximity is important for 2 reasons. First, this is where the metro station will be located. It's scheduled for 2029. Second, there are more than 15 universities there, so there is additional rental demand coming from that. And the area that will win the most from this is Dubai Land Residence Complex. It wasn't really popular among developers for a long time, so right now their housing quality here is below average. But because it's not entirely new, there is some residential infrastructure in place, like parks, a school, grocery shop, a mosque, and bus stops. So as is, and mainly because of the low prices, the rent-to-price ratio here is between 7.6 and 9.6%, depending on the apartment type. However, the real reason why this area is on this list is because some prominent developers are actively building here, and they are bringing the housing quality on another level, like Imtiaz. To make the difference obvious, on the left part of your screen is a normal apartment in Dubai Land, and on the right is Westwood by Imtiaz in Al Furjan. These are not renders but real pictures, and these apartments are not upgraded by the owners. Imtiaz delivers all their units in all their projects fully furnished and fully designed. And the case with Westwood is relevant for us, because it significantly surpassed the average rental rates of the area and got the investors superior returns. The average one-bed rents out in Al Furjan for around $19,000. The average one-bed in Westwood rents out for $27,000. That's roughly a 40% difference. If the same happens in Dubai Land, those who invested in Imtiaz's one-bed will achieve roughly $21,000 annual rent. Given that one-bedrooms are priced at around $270,000, this translates into an 8% rent-to-price ratio. But even if we take a super negative scenario and say that the rent will be the same as average in the area, and this is $15,000, then the rent-to-price ratio would be 5.7%, which is still higher than Dubai average. The main risk with this area is that Imtiaz currently has roughly 7 buildings under construction, so the apartments will lack uniqueness. And before I tell you about an opportunity that is truly unique, I want to make one disclaimer. The list of areas and examples of properties I'm sharing right now is for the general public. And for any given budget, goal or risk tolerance, there are specific investment opportunities. So if you need an investment that is tailored for you, reach out to us. We provide customized property selection, run all the numbers and help you secure the best deal possible. We handle everything end-to-end and we do it for free. Scan the QR code, call or WhatsApp us, or click the link in the description to get a free consultation with my team. And if you asked my team about something unique that will bring strong rental returns from Airbnb and where you could live yourself when you come to Dubai, they would tell you about Dubai Islands. But not Dubai Islands in general. You've heard about them many times. I'm talking about this specific spot on Island B. Let's do a high-level breakdown of why the project that will be built on this plot is expected to be great. First, there will be a private beach, meaning no one can use it but the residents of the building. That's different compared to what's happening on Island A, where a big share of the coastline is a public beach, accessible by all the island residents. Second, Island B will be much calmer and much more private itself. It's located further from the flight path, so the airplane noise won't bother the residents. And the number of residential buildings on this island is limited, because a big part of it is dedicated to villas. And third, the buildings here will be very boutique. The first one had 63 units, and the second one will have just around 70. For comparison, this project on Island A had more than 700 units, and this one about 950. This reduces the competition significantly, both for renting out and reselling. And of course, the residents will have access to all the facilities of Dubai Islands. As 80 hotels are planned in the area, there will be more than enough restaurants, spas and entertainment facilities. And according to the master plan, there will also be 2 big golf courses. Now let's discuss the numbers. To invest here, you would need a minimum of $600,000 for a 1-bedroom. On per square foot basis, that's about $760 per square foot. Just for reference, a similar type property on Palm Jumeirah, and I mean a boutique residence with a private beach, is priced 80% higher at $1.4 thousand per square foot. The Palm is much more developed and hyped, so you cannot compare it directly. But if you want to get an apartment with a private beach, this is how much you would have to pay in another place. Conservatively, we estimate the yearly rental income to be from 150,000 dirhams or $41,000, which translates into a 6.8% rent-to-price ratio. This is based on the current market rates for the long-term rent, and given that A. in 3 years the market will grow further, B. the Dubai Islands will get more and more developed, and C. such properties generate more on Airbnb, this number could get much higher. The downside of beachfront properties is that their rental income is tightly connected with economic cycles. When the tourist numbers drop, they suffer the most. But what if you want to get a super stable rental income that is protected from market fluctuations? Where should you invest? These charts will help us figure this out. The left graph shows the average rental rates for Dubai apartments. During the COVID crisis, the average rate dropped by 27%. On the right is a graph for a different type of property. During the COVID period, the drop was 2 times lower than that of apartments. This data is about villas and townhouses. And it makes sense, they are normally occupied by families who are more stable types of tenants. But there is one problem. The rental yields are not that good. Some examples are on your screen, and quite often this number doesn't go higher than 5%. But there is one place that has a very decent average rent-to-price ratio for houses. Here, sales prices and rental rates are well balanced, and that results in a 6.5% average rent-to-price ratio. This area is Jumeirah Golf Estates, one of the oldest villa and townhouse communities in Dubai. It's built around big golf courses, has a lot of greenery, and is loved by residents. The issue with many properties here is that they are quite old. However, new projects are rising, and we can already say that they generate very decent returns for their owners. Like Jasmine Lane, these 3-bedroom townhouses were recently handed over, and the yearly rental rates start from 300,000 dirhams or $82,000. Now, these houses are priced on average around $1.2 million. But at the off-plan stage, the prices were about 20% lower. So investors who bought back then now are getting 8.2% back in rental revenue. And there is another launch happening right now. One more sub-community is about to be built right next to Jasmine Lane. Here the developer builds 4- and 5-bedroom twin villas, which are essentially 2 corner townhouses. The price for 4 beds is about $1.6 million, and 5 beds are priced from $2 million. All that information gave you several ideas on potential rental property investments. The next step is to assess and compare them. To learn how to do that, check out this video.